All right, if you're a Microsoft investor, the last few months have probably been, well, pretty painful. So as your advisor, I want to tackle the elephant in the room. Why has the stock dropped so hard, and what does it actually mean for your portfolio?
I mean, look at this number. In the first quarter of 2026 alone, the stock has fallen by a staggering 25%. That is a really tough start to the year for one of tech's biggest and, frankly, most reliable names. And a lot of investors are, rightly concerned.
And just to be clear, this isn't some minor dip. To put it in perspective, sources are calling this the stock's most severe quarterly decline since the 2008 financial crisis. Yeah, that 2008. So this is a big deal that really deserves a closer look. So to get to the bottom of this, we're going to break it down. First, we'll look at the market's verdict. Then we'll decode what the charts are telling us. After that, we'll dive into this core conflict between spending and sales. And finally, we'll unpack that shifting story around AI. Okay, first up, let's just talk about sentiment. A stock's price, at the end of the day, is just a reflection of what everyone believes. And right now, that belief in Microsoft is definitely showing some cracks. You could call it a crisis of confidence.
Now, this is really crucial to understand. This isn't just a case of the whole tech sector is down. Nope. Microsoft has been the absolute laggard among its mega-cap peers. That tells us investors are singling it out for some very specific reasons.
So we know investors are worried, but what are the stock charts themselves actually telling us? By looking at the technicals, we can get some real clues about where the price might be headed next. Before we dive into the chart, we need to know about something called the moving average. Don't let the term intimidate you. Just think of it as the stock's long-term mood. It smooths out all the daily ups and downs to show us the bigger, underlying picture. So, what does it mean when a stock's price actually falls below that critical baseline mood? For technical analysts, well, that's a major warning sign. And that's exactly what's happened. The mood has soured big time. For technicians, that 100-week moving average is like a major line of defense. A clean break below it suggests that the long, powerful uptrend we've been enjoying for years might be over, or at the very least, it's in serious trouble. But, and this is a really interesting wrinkle, while that long-term trend looks damaged, a bunch of short-term indicators are telling us the stock is deeply oversold. Think of it like a rubber band that's been stretched way, way too far. The selling has been so aggressive that a short-term bounce could be on the horizon, even if the bigger picture still looks uncertain. Okay, so charts only tell us part of the story. To really understand what's happening, you have to look at the business itself. And right now, there's a fundamental conflict at the very heart of Microsoft that's making investors really nervous. Here is the core of the problem in one simple chart. On the left, you see sales are still growing at a healthy 17%. Great. But on the right, the actual cash the company has left over for shareholders, its free cash flow, is going down. And whenever you see sales go up, but cash go down, well, investors get worried. So why is cash flow shrinking? The reason is this absolutely massive number, a forecast of $146 billion in capital expenditures for fiscal 2026. That is a 66% jump from the prior year, an unprecedented level of spending, and it's all aimed at building out AI infrastructure. And this slide shows the exact trade-off every investor is weighing right now. Yes, they are spending an incredible amount of money, but they're spending it to fulfill a massive, record-breaking backlog of sales that they've already secured. So the real question is, will the payoff from that backlog be worth the incredible cost? Now, this massive spending brings us to our final piece of the puzzle, the story or the narrative around AI. Because sometimes hopes and fears can drive a stock just as much as any balance sheet. You see, the once bulletproof AI story that propelled Microsoft stock higher and higher is now facing some pretty serious questions. Investors are worried about competition heating up from Amazon's cloud business, a recent slowdown in Azure's growth, and the risk of being way too dependent on its partner, OpenAI. And as this analyst points out, there's a new fear on the horizon. The next evolution of AI could be something called AI agents. Think of smart assistants that could perform tasks for you without ever needing to go through traditional software like Windows or Office. You can see how that could threaten the very core of Microsoft's business model. So how do we put all of this together? Let's try and summarize the argument for both the bulls, who see an opportunity here, and the bears, who see a whole lot of risk. It all really boils down to two very different stories. The bull case is simple. You're buying a world-class company at a rare discount with a record amount of future revenue already locked in.
The bear case says that the massive spending, the rising competition, and the weakening AI story mean you're not getting a bargain, you're just catching a falling knife.
And so, this is the final, crucial question. Is this record spending a sign of weakness, a desperate attempt just to keep up? Or is it a sign of pure dominance, the bold investment needed to secure the next decade of growth? The answer to that question is what you, as an investor, really have to decide.